Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:42 a.m. Central Time, and I'm recording this in preparation for the market day of March the 8th, 2016. Remember that on YouTube, you have a free subscription to the channel, and you can be alerted to new content when it's published as a subscriber. Give the video a few minutes after being published for the video to be available in high definition, which can be important when you're looking at the charts and other details. Click on the setting button and choose the high definition playback level. In this same area, you can also control the speed of the playback. I routinely find that I can fully understand the videos at about 1.5 times the recorded speed. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And a little bit of weakness last night, and when we look at the 4 U.S. broad market indices, for the S&P futures, we were down about 8 points at the time of this cut, or a little less than 0.5%. Russell futures were down about 0.75%, which is kind of interesting since they were the strongest yesterday. They're giving up the most today. Nasdaq is down about 0.5%, and the Dow's down about 0.33%. Crude Oil is essentially scratch after a giant move yesterday. Euro is also at scratch. Bonds up big in the overnight, up about 0.8%, and gold is up about 0.75%. In overseas action, mostly negative, though China is just above scratch. Hong Kong is down about 0.75%. Japan's down about 0.75%. Germany's down about half, as is the United Kingdom. In terms of macroeconomic reports for Tuesday, there really isn't anything of note on the U.S. macroeconomic schedule. In terms of looking forward to tomorrow, we have the regular crude oil inventory, and we have a 10-year bond auction, so that might play with your bond trading. And that looks to be about it of any note. Yep, looks to be about it of any note. In terms of current volatility conditions, yesterday saw a little bit of an uptick, short-term VIX to a 17.66. Skew is just below the threshold in which we take note of it. IV percentile on the S&P, a very low 23, the Russell 24, Nasdaq 29, DAX a 21. There was one indice yesterday with a standard deviation move on a close-to-close basis, and that was the Russell, putting in a positive 1 standard deviation move. In terms of, let's go to the charts. And here we have the SPX, and note that these bodies are getting decidedly smaller, and we're also starting to get a lot more wicks. We're also starting to get closes that are down off the highs of the day. Now you contrast this to prior days where we are closing strongly at the high of the day. Much of this really bullish action was closes near the highs of the day, with the exception of the bull flags, and they only lasted a couple days. So this pattern's starting to have a little bit different characteristic. We've been looking for the potential of a pullback, some sort of retracement, and we're going to watch that characteristic of that retracement very carefully, because we want to see, do we get a higher low, which sets this up as a bull flag, and a continuation pattern to go even higher and up into this prior range, which we're kind of tickling at the bottom of that prior range right now. So that seems to be something of resistance after a very, very long series of very short-term, strongly bullish move. The other thing is, of course, if it undercuts this swing low and we get a lower low, then we suspect that maybe this is just simply wave 2, this being wave 1, wave 2, and then wave 3 would probably take us below the lows of the 1810 area here on the SPX. So this is going to be a very important swing to watch and see just where it comes in relative to this area right here. Right now, we're just looking for a retracement in the very short term, and that retracement may have started last night. In terms of the Dow, we see something yesterday with a bit of a hammer, and certainly setting up. Actually, this is today's, as in last night's, today's candle right here, a bit of a hammer. So we'll see where that goes. And the Nasdaq clearly has been in a reversal pattern. Remember, it came up and touched the bottom of the cloud, which is a resistance area. So after the big confirmed breakout, it's been, spinning tops and dojis since, and clearly looks to want to have something of a retracement. So we'll see where that goes as well. And then, very importantly, the Russell. The Russell has just been on a historic tear that compares to anything that has ever happened in the 19-year history of the Russell. What you see so far, the action today is also a bit of a hammer pattern. So, again, we'll watch to see where that goes. And let's see where the other indicators are taking us. Volatility seems to be wanting to find support. So if that does reverse, that would seem to be negative for the equities as well. And remember, we're just talking about short-term reversal patterns at this point. Our expectation is that given the short-term pattern that led into this retracement, potential retracement, that we're looking for a bull flag as the presumed leading candidate. Gold, of course, has, sometimes gold seems correlated, sometimes it's not. Gold seems to be uncorrelated to the equities at now, and has been making recent year highs. We're certainly at a 52-week high, and we've broken out of this pennant pattern and very much confirmed that, and then the pattern seems to be on a continuation bullish right now. So very interesting things going on in gold. When we look at crude oil, we said that we had a very important, very long-term resistance area. It plowed through that area. So probably surprising a lot of people, and that's why you have such huge moves on these last couple days, as it probably ran a lot of stops. And then once it broke out of the cloud, that's its own bullish entry signal as well. So there's a real potential here that gold may have found something of a bottoming pattern. This is the strongest breakout that you have had on crude oil in quite a number of months. And let's look at bonds. That'll wrap us up. Bonds, we did touch on this already, so I think that's probably enough with that for today. Let's go ahead and go back to our daily report. This continues to get, better and better. We are in intermediate term phase opinion, phase 4, so bullish pattern with price patterns near horizontal resistance, and throw in some bull flags in there. Portfolio investor posture from IBD confirmed uptrend. Accumulation distribution. The Nasdaq actually slipped half a step yesterday down to a D. The S&P remained a C-. GMI index retains its 4 out of 6 and buy signal since March the 2nd. The decision points saw some of the individual components go to an intermediate term bullish posture, but the overall signal here for the S&P 100 and 500 and Nasdaq and Dow have not yet changed. So we're watching to see where this intermediate term goes. Are we in a short-term bull against a long-term bear that just puts this as a big bear bounce and then rolls over in alignment with the longer terms, or do we see these greens start to roll up? Right now, it's indeterminate, and the consensus of all this is that we're still a market in transition, and we're waiting for that outcome to play itself out. to where we can recognize it. In terms of position sizing opinions, you've got two different signals here, and they're both fairly healthy. One at the 100%, and the other volatility-based system is based on the VIX futures is also at 75%. Intermediate term market posture, very strongly bullish. These are readings that are about as high as they can be, and it's my understanding that on the SPX here that this is the highest reading in a year. So it's just pegged to the wall in terms of just how strongly bullish this is for its intermediate term reading. You see the Dow at 99.0, the Nasdaq 97.4. Look at the Russell coming from dead last way back in the pack to now at 99.1. So just amazing, the depth and just how far this rally has run. And during the course of this, of course, we've turned that sentiment line from being bearish to a weak bullish. So that is also coming in and supporting this bullish market. Overall, the strength of this bullish trend is relatively weak, but improving. So kind of keep that in mind based on this indicator. And our hedge warning status remains at a 0+, and it's not likely to get any better than that until we have all these time frames in alignment. So we'll probably retain 0+ unless we really pull the stack together or we see a deterioration of the conditions and it starts to elevate. In terms of special opinions, option income strategy, no change from yesterday. The VIX is still borderline acceptable. VIX futures are just over 18. And as such, you might want to, for novice traders, be considering reduced position sizing, but perhaps starting to put some positions on. More aggressive traders, of course, are prepared for the larger than expected to be normal moves of Delta and Vega moves. Cover call strategies and put selling, no changes here. Conditions are acceptable. You might want to still consider a number of relatively defensive postures. Remember, there's still the very real scenario, given those mixed time frames, that this is just a bear market with a bullish bounce on the short term, albeit a very, very strong one. If that scenario would have pulled through, you'd be very happy that you are using these defensive structures of 3 in the money and 1 out of the money strikes, and then also using low beta, so 1 low beta and no high beta ratio on your portfolio choices of your covered call selections. Put selling, make sure you are using the position size and the scale you are willing to own, just in case that potential plays out. Now, you see in the special warnings areas that we did have a couple new ones come online yesterday. Market and decline and sharp increase warning both fired off with yesterday's action. VIX futures, of course, are still up over 18, though just barely. The week out expected move, a tad high. And normally we would put in warning status anything over 40. So it's a little bit high for about 10 days out. New highs, new lows, though, very healthy. 835 on the new highs versus only 8 on the new lows of the New York Stock Exchange. Risk on all 5 indicators, the key intermarket risk aversion indicators. In terms of sentiment, and remember, sentiment can be, in quotes, very high for extended periods of time, but we start looking for the signs of reversal. And you saw as we did the chart review, that's what we were watching for, whether we're seeing any signs of reversal. In the short-term risk on the stocks from a sentiment standpoint is now a 7 on a scale of 1 to 10. Gold also at a 7. Also look for in these industry groups or indices, or in sometimes ETFs for countries, those especially here at the top of this list, be watching for reversal patterns here as well. Remember, they can stay high for extended periods of time. Fear and Greed Index, just about ready to go into the extreme greed quadrant. So keep that in mind. We're starting to get really overbought on a whole host of metrics, and you have to kind of wonder when that starts to run out of energy. In terms of intermediate term market posture that are set as bullish or buy ratings. Note that we did get the SPY, that medium term, did turn bullish with yesterday's action to join with gold, TLT. Look at here, S&P 400 mid cap also in recent days. Consumer discretionary, consumer staples, industrials, materials, technology a few days ago, and then utilities, industrials, and materials. So a lot of signals here between, say, about the 29th and bleeding into last week, starting to show up. So this is no longer just defensive, and indeed we even may be seeing the evidence of some of the money that went into the defensive part of the allocations for people as they were accumulating new positions off the bottom in the first 3 weeks. Well, as we went into that third week, we started to see some of that money move from the defensive to these other higher beta areas. So that's very healthy for the bullish market and a good sign. And indeed, as you look here in terms of sector percent change, you see the short, the intermediate term, all are up. Long term are turning up. And we're just about to that point of that sea of green. In terms of who the heroes yesterday were, look at energy, driven by crude oil, but also materials, healthcare, and healthcare has been battered lately, especially with its biotech components. And then we get a couple defensive sectors, telecom, utilities are starting to pick up. We need to see better performance out of the financials. And then, of course, we need to see, information technology also, though, on the 1 month basis, these areas are starting to, really stand up. So we're starting to see more broad-based movement, and that's an important sign to keep in mind. So I think that's probably enough for today. We went with a kind of a long session yesterday. We had a lot of stuff. So let's go ahead and start our wrap-up procedures. One of the things, if you'd like to get emails, and we send out a very limited number of emails, we are not going to pound you, but if you'd like to get some emails, for example, when we publish a new blog article or other items of interest, and most importantly, we give alerts by emails to our subscribers, to our email distribution when we change the head risk level, especially when we change it up. But if you just go to this hyperlink right here, scroll down just a little bit, you'll see this button. Click on that button and hit your name and your email address there. That'll also give you a hyperlink to be able to get to a ebook portfolio strategy that you might find of particular interest. You can also do this through your smartphone. Just text Falcon Global, all one word, to that number 22828, and that will get you started. And that'll also give you the hyperlink to be able to get the portfolio ebook as well. One of the things to keep in mind is that we do this for free each morning with this market preview. So if you'd like to give us a pat on the back and encourage us to continue to spend the time and effort to do this, there's a couple things that you can do. You can certainly like us on YouTube, retweet us to the Twitter followers, to your StockTwit followers, etc. You can subscribe to that YouTube channel. We're closing in on 200 subscribers already to the YouTube channel. And we are over 10,000 views now on our YouTube channel, something that is quite gratifying. Obviously, it tells us that we're doing something that is helpful to traders. Now I'll just scroll through the rest of this. If you see something that you want to spend more time on, just hit the pause button, go to those hyperlinks, and get the additional details. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and note down here at the bottom the full hyperlink that'll take you to the full set of disclosures. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading.